Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing NanoXplore stock so we can determine if it's a buy or a sell. NanoXplore is a manufacturer and supplier of graphene powder that is used in industrial products. The company provides graphene-enhanced plastic products to various customers in transportation, packaging, pipe, film, electronics, and other sectors. Graphene has a wide range of applications and uses due to its exceptional mechanical, electrical, and thermal properties. The company is headquartered in Montreal, Quebec, Canada, and was founded in 1995. Let's get started with the model. This is a small cap company, 500 million market cap. They're trading at $3 a share, and they have 169 million shares outstanding. We're looking at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They're still a fairly small company, not generating that much revenue, so they have negative free cash flow each year. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also negative each year. Revenue is the sales for the company, and that goes up nicely each year from 62 million to 115 million. Let's look at the capital structure. 110 million of equity, 25 million of debt. They're 81% equity, 19% debt. And they could pay off all the debt with the cash in their balance sheet and still have 13 million of cash left over. They have a WACC of 11.3%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year for, that's 500 million. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $361 million. We divide that by 169 million shares. And we get a calculated stock price of $214. They're trading at $301, so they're trading at a 41% premium. It's a sell according to the model. 7 analysts priced this stock, and their price target is $725. So they're saying the stock is pretty undervalued. This is where the stock has been trading since it IPO'd. It was under $2 for several years. Starting in the third quarter of 2020, the stock price was really driven up past $8 a share. And then it came right back down to $3. It is trading about 40% higher than its IPO price. It's a little difficult with these stocks because they're not really making money. So you're really betting on the future, on the potential that they're going to actually make money. And a lot of it is dependent on graphene products. If there's a news article saying a lot of companies are going to start buying graphene products, their stock price will go way up before they even get any sales. And if there's a negative news article about graphene products, their stock price will go down. There are 16 companies in the same industry as NanoXplore, and they rank 14th in market cap. I converted all the market caps to Canadian dollars. And a lot of companies in this industry pay a dividend. Of course, they don't pay a dividend because they're not generating positive free cash flow. Their price to book and price to sales are a lot worse than average, and we can't look at their PE and price to free cash flow since they have negative earnings and negative free cash flow. So to summarize, I have them trading at a 41% premium. I rank their free cash flows 2 out of 10, their revenue 5 out of 10, and their ratio is 3 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.